is down about 7% as well. So just wanted to make that quick mention. Mangalam.
All right, let's welcome Jay Bala then from cashthechaos.com. Market expert Himang Jani joins in as well. Jay, coming to you first, at what point does it stop? That's the bigger question. Everyone's waiting for 22,000, 21,800 to 22,000 is the support. Do you think it's a good time to start nibbling into the indices right now and some stocks at these levels with slightly deeper stops, or maybe wait for a confirmation of an up move and then buy a little higher?
That's right, Mangalam. Good to be here. I would do the latter, and that's always the better strategy. You wait for the market to tell you that it's bottoming out, and once it's done that and given you a reversal signature, that's the better strategy to get inside the market. Until that point, you stay in cash, do nothing. I'm not a great fan of SIP, and I would rather be outside the market and regret it, rather be in the market and regret. I wished I was outside the market. So the indications are right now still the momentum is pretty strong to the downside. Yeah, oversold, but in a bull market shouldn't get oversold. It stays above oversold levels. So getting oversold is a sign of market weakness. Unlike what others say, if it's in a bull phase, the markets don't get oversold. So this is a warning sign, and we have, like Prashant pointed out just a few seconds ago, IT index, which was up, holding up just 5% with a 5% decline, that's come under tremendous pressure. And we had pointed out repeatedly on CNBC that if it were to break 39,900, it'll come under intense pressure. And that's what has happened. So wait for the market to say that it's bottoming. Until that point, do nothing.
Okay, all right, Jay, don't hurt me. I'm keeping my SIPs going, and I'm having a lot of faith out there. That's fine. We could have different views on that front. But, the other factor that you had also mentioned is on the small cap space, right? You said maybe we drift a little bit lower, but it appears we are bracing for a bigger move on the upside, at least in the near term. That's still on because the small cap index is the one that's taking it on the chin, on the nose, it's getting hammered.
That's right, Nigel. The February 18th low was an important low, and I said if it were to exceed it by 42 points, then I had to do a slightly bearish revision. But the next support comes at about 14,100. But the idea that small cap stocks are likely to see a fierce bounce in the short term, that will give an opportunity to exit, that doesn't change. So, it would be an opportunity to exit. But I still see somewhere about 16,800 to 17,000 once the reversal sets in. I know we had the bounce that we saw from the February 18th low just got a 3.5% bounce. And it's so fleeting. Probably the next one is likely to be little more sustainable, because by the time I anticipate the large cap also to have come to a significant support either at 21,800 or 21,200.
So 14,100, if it holds out, you're not ruling out a level of around 16,800 to 17,000. Is that correct? Which will be a good selling opportunity, correct?
Yeah, spot on. You nailed it, Nigel.
No, you nailed it. I'm just reconfirming it, Jay. Tell us, what about individual calls? You want to give us two stocks?
It's a bit late to sell or go buy, because it's be against the market. But you might want to look at stocks that have been doing pretty well as possible selling candidates. Look at Interglobe, which it's been doing quite well, and it's been staying up. Usually when markets starts to drop, the winners get sold to compensate for the losing candidates. So wait for the 2-day low to break on Interglobe. If that were to break, keep a stop loss at about 47.40 and anticipate Interglobe to give a corrective decline.
That's very interesting, because a lot of people are bullish on Interglobe, and you're saying that, okay, if the markets have to fall, maybe some of the winners will fall as well. So 2-day low on Interglobe is something we'll keep an eye out on. But, it's the mood of the market. When we were talking about a couple of stocks seeing an up move, and Nimesh was talking about that impact of the flows coming in as well, right? IndusInd Bank, it recovered from the lows, the flows impact came in, and then from there itself, there was a slam dunk. And that's not the only one. Currently at the low point of trade for IndusInd Bank, down about 7%, when it had recovered to the cut of 3.5%. Hyundai is the other one, which saw a big up move from the lows. It was up around 6-7% from the lows, went into the green, went higher. And just as swift was the rise because of the MSCI flows, equally swift was the decline as well, now down about 6.5% from the highs itself. So we are seeing, the mood of the market is definitely that on the sell side as against seeing some bottom fishing. Any sort of recovery is being sold into a lot vehemently and with a lot more gusto as well. Let's bring in Hemang Jani. Hemang, any idea which seems appealing to you right now in wake of such capitulation in the market?
Sentiment is definitely quite weak, and people are sort of capitulating. But I don't think that when you look at the markets, there are certain stocks which are holding out well. So I think you guys discussed about Interglobe. So when I look at the numbers, fundamentals, the fact that the crude is low, the fact that you have 2 more airports which are going to open up, and it has outperformed the market in the last 6 months to 12 months. So I do think that this is be one stock that I would have a high conviction on. You can have more stocks on the mid cap side. I was surprised by the way Ultratech sold off yesterday. The kind of news which was there and relating that the market cap loss was too much. So I do think that it would be good to kind of look out for opportunities and get into some sort of a buying mind frame, though it's very difficult to actually implement. But given the way the market is selling off, we are somewhere near that capitulation phase to my mind.
Okay, and just a quick word, you're positive on Ultratech, Interglobe, BSC, you want to give us a word on that?
So, Nigel, BSC has been a darling of many investors. It's done very well. And when you look at both the equity and derivative volume, from all-time high, it's down 42%. Now, some optimists say that the premium turnover on the option is relatively, it has fallen less. But this has been a theme which had a lot of over-ownership. So maybe I think some people are trying to get out because you don't know how long this low volume phase will continue, both on the derivative and cash segment. So maybe it's going through a bit of a correction. We should wait out for more signals to emerge in terms of volume revival. Try to buy into it.
Got it. Okay, all right. Hold on. Let's slip into a short break. Come back, continue to focus on markets, and we'll wind down the markets for you as well.
Welcome back. You're watching us here on Closing Bell as we're counting down to what has been a very weak session for the bulls and a very weak week itself and a weak month. Something that hasn't happened in the last 29 years. Let's wind the trades down with last thoughts from Jay Bala and Hemang Jani as well. Hemang, in this decline, you said sentiment is extremely weak. There are a couple of stocks which are bucking that trend. Cements, for instance, cables and wires. There was that big announcement that came in yesterday on the back of which there was a sharp sell-off that we saw in names like KEI Industries and, Polycab and Havells too. But now these stocks seem to be finding their mojo back. They've recovered a bit. KEI Industries, for instance, is ending the day at the high point. It's up 4.5%. Do you think the sell-off has, largely priced in the disruption?
Definitely, Mangalam, there was a case of overreaction. See, these are not very small companies. So Polycab is about 75,000 crore market cap company. And this quarter, put EPS of 45, full year about 137,000 crore order books. While there is a case of disruption over a period of time, for next, let's say, couple of years, 3 years, the companies would deliver good solid growth. So I think that 18, 20, 25% kind of a reaction on a large cap companies clearly is a case of overreaction. So I would definitely use this as a buying opportunity. The only thing is that because there is a concentrated holding by some maybe funds, PMS houses, AIFs, and they have to kind of reject their portfolio, the impact could be very high, which is what is visible right now.
Right, gentlemen, thank you so much for your time today. And we'll start beginning to wind down today's trading session. What was, like I said, a weak one for the bulls. And